Hey traders, Raghee here. Happy Friday, everybody. Welcome to Charts and. All right, so great to see everyone. Time to do some caffeinating and dominating. All right, so I've got some resources here on the left side of the screen. I'll leave those up for you all. That's where you'll find the free indicators that we make available for download, updated analysis and breakdowns on some of the things that are moving the market. Just yesterday, Trish and I were here recording things about real yield and bonds and what that means to rates and how we can understand where the trend is heading and why. So a lot of great stuff we post there a few times a week. So if you haven't checked it out, it is a great supplement to what we do here at Charts and Coffee. But as always, our time here this morning, every morning, Monday through Friday, is about your questions. Remember, we do have our Sunday show, 6 p.m., accompanying the weekly notes that I send out to members via the alert. So those weekly notes go out. We take a look at this week in the market on Sunday night, 6 p.m., right here, Eastern, right here at the Simpler Trading YouTube channel. All right, so without any further ado, let's just jump on in. David, good morning. What is my shorter term outlook for gold? Sure. Against a backdrop of rising interest rates and a stronger dollar. So David, the US dollar and gold actually do not consistently have an inverse correlation. So that's probably one of the larger misnomers out there, because look, gold is sort of heading up and so is the dollar. If there was a strong inverse or negative correlation, what we would see in gold is that as the dollar is heading up, gold would be heading clearly lower. And that's just not what we see. They don't have a sympathetic or positive correlation either. In other words, one doesn't drag the other up. So their connective thread, and there's stuff in the middle that sometimes explains why they look correlated and sometimes why they don't. So one of the things that you'll notice with the gold market is the sensitivity to rates. And of course, the dollar has that sensitivity as well. So this is really more a matter of real yields, which is the nominal yield of a bond minus the rate of inflation. And I know that sounded probably like gobbledygook, some serious technobabble. What is a bond yield and what is the rate of inflation? That difference is known as real yield or real interest rate. And so when that is heading higher, gold heads lower. And that's that. Now, if that heads lower or if it's chopping, gold will head higher and chop, right? So that's the connective thread with the dollar, which is that last part of your question. But as far as the backdrop of rising interest rates, look, I like the long gold position. So let's take the macro out of it, right, for a moment and say, well, technically, what does this look like? It was an uptrend. Now it is a little choppy, but the directional bias is still bullish. We're still above the 200 propulsion. We're still finding pretty good support within the wave. We have some very nice volume ledge action, pretty much where we are at the moment in gold around 1935. So very little reason to be bearish, both macroeconomically and then also technically. So cool question to kick it off. Thank you, David. James, how you doing, my friend? Watching GC for a possible GLD or GDX position. Yes, so GDX is absolutely on the radar. In fact, when you compare gold, whether that be GC futures, MGC micro gold futures, or GLD, the gold ETF, we're in a good spot to be bullish in the commodity, but it's the miners, right? Whether that be GDX, XME, SLX, we've been looking a lot at metals and miners in the sector secrets mastery, and GDX is no exception. In fact, the structure of GDX is better than the structure of GLD. However, We are in tail wags the dog season. Individual stock earnings releases can have a disproportionate, outsized impact on the underlying sector and the ETFs that are weighted with that stock. So what we want to remember is clearly, we've got things like Newmont that I would love to get a piece of, but I don't want to in front of earnings. So take a look at NEM, right? And take a look at GDX. And all of a sudden, that tail wags the dog becomes crystal clear, right? So I like the way we can dilute earnings, the high impact scheduled high volatility event of a hot zone like earnings. I like how we can dilute the hot zones by playing the ETF. So I would suspect, if not today, Monday, we're going to have a GDX setup. And you'll notice pre-market is just below the wave. Now, if you're already in GDX, then sit through this. This is something we knew could happen. This is why a setup on a historically high volatility day is only aggressive. We deploy very little capital. We use a 25% budget. We risk really no more than a 1.25% of our account. And risk is different than spend. I get this question a lot. Rog, when you talk about your market money math and you talk about the holy grail that you teach in the Sector Secrets Mastery around risk and position sizing, which is the same conversation. I know a lot of you know that. Why is that so important? Well, when we have a move like what we saw in GDX yesterday, James, you saw that, right away, hey, Rog's going to tell us to wait for a minor low or an inside day. I think we're going to see the building block of a minor low. I wouldn't mind putting on an aggro position for those of you that may not be in it. We're going to keep an eye on it for sure, James. Yeah. So we're below the wave. We're below the wave. And so I'm going to focus on GDX for us. And then remembering that many of the stocks within it, and we'll have to discuss that. We'll do that today in the AMA, Ask Me Anything session. So every Friday, the last 90 minutes before the day ends, we kind of kick it down a gear and we sort of chill for a moment in terms of being able to say, look, we're not going to actively trade the very last 90 minutes of the trading week. But what we will do is recap what we see, recap what we've done, look at trade management and trailing stops for our positions. I think we're going to probably get real close to a target on our KR potentially position. We've got that great ITB, so we'll catch up on some of those. We'll talk about, what happened to EWZ and whether or not we want to look at getting back into that. And of course, we'll talk about GDX. So the last 90 minutes on Friday, we just take it down a notch, take questions, talk about, tech questions and order execution questions. And, when Trish and I sit down and look at some of the pressure points for new members, it's interesting. You all really catch on unbelievably quick, way better than I did back in my day, at the techniques, at the strategies, at how to use the indicators. I'm always amazed at the learning curve of our members and how quickly they catch on. But what I also see is people say, Rog, the technical stuff, not the technical analysis, but how do I set this indicator up? And what is the setting? And what is it telling me? Those kinds of things are far more difficult. How do I route? And, when you talk about routing your order, what does that mean, Rog? What do you mean work the bid or the ask or split the bid? It's that kind of minutia where a lot of traders get frustrated. And Fridays are where we address that every week. So we'll definitely be diving into that, James. Good stuff. GC, not so much. GLD, maybe, but GDX, I think, is a definite, it's on the radar. Hey there. How you doing, Aircon? To follow up on last night's video, where do I find the index weighting information as related to ETFs? So that's an easy one. You can do that at Yahoo Finance. I think Zax has got it. I prefer a site called etfdb.com. And I'm on that site every day. I love that site. Everything from weighting to head-to-head comparisons between two ETFs. We did that in the mastery just yesterday. A lot of folks asked, Rog, what's the difference between ITB and XHB? Boom, we can do a head-to-head comparison. So I love that. Then flows, we want to look at flows. What kind of trend are we seeing in the flows of the ETFs? That's really probably more helpful for our quarterly portfolio discussions, which now is a part of the mastery. But yeah, ETFDB Aircon, yeah, probably my favorite. Yeah, I love that site. I don't know the guys over there or gals or the people, but love that site. Too many ads, but once you subscribe, they're gone, and it's a site that I subscribe to. I love to support sites that I think are giving us really great information, and they're one of them. All right, Anders, good morning. What do you think about a possible eBay short? Price seems to be far past the daily 50. Would imagine either a retest of the 50 or support at the FOMC short squeeze. Okay, so all of us have levels, Anders, that mean something to us. You're looking at a 50 SMA, I'm imagining. I look at a 55 EMA. Pretty close, pretty close. So more or less on the same page. So then the question is, what's the structure? Even before I get to what the different secret squiggles are telling me about support and resistance, remember, support. What I'm about to say, gang, applies to all of us. I didn't know this early on in my career, but it made all the difference. The way that we view support and resistance has everything to do with the underlying market structure that we are in and the structure that preceded the current one. So we had a downtrend, really, red grab candles, bearish momentum, bearish trend. You can see that here in the multi-trend. You can see that as recently, well, not so much recently, March 21, we transitioned to now a non-trending market chop, but it still carries with it the bearish directional bias. So what do I do in chop? So Anders, and I don't really have a setup here, to be straight up with you. I really don't on this particular symbol. But here's what's really important. And it's a question, again, probably the second most important thing that I do is I ask myself, why this symbol? Why eBay? Right? Because that's something I think people in our position kind of hesitate to ask, why you're looking at eBay. But I think you all know when I ask you that, it's because I really do care about you all building the best possible watch list possible that you could possibly build. So if we're focused on the quality of our watch list before we get to the way that we're going to execute the strategy or the secret squiggle that we're using, why eBay? That's always going to be the first question. Now, the way to answer that would be really to go back to ETFDB and ask yourself, what is eBay hanging out with, right? What is the niche? What is the sector? What is the group that's been pre-curated? It's already been grouped up for us. We don't have to guess at what's going to move with it and move it. Wall Street's done that for us, right? And that's what's really important. Wall Street's already done that for us by way of indices and ETFs. So I would look inside to see what else is moving with eBay in a similar way, but has a downtrend. All right. So would I focus on the short side? Yes. But do I have a setup? I actually don't, Anders. I don't have a setup here on eBay. So I think it's just as important to say, look, very cool symbol. There might be some better structure in the group that eBay is in. Look a little deeper, and I think you might find some better setups even than this. But cool corner of the market to focus on. Thanks for the question. John asks, hey there, John. Can I provide my thoughts on GC for May, June? Would I be a buyer here? So again, what's the zone for gold? The closer I get to about 1925, the better. The closer I get down to 1900, even better. Remember, this is a choppy market. This kind of, John, goes back to Anders' question. What's a better structure than GC? And even though GC is chop and GLD is a trend, remember, GLD is reflecting what's happening with GC, but with that funny little truncated 9:30 to 4 Eastern Wall Street hours, right? While GC is more of a nearly 24-hour type market. So I'm going to focus on GDX. So this is more about, yes, looking at gold, but choosing our adventure and preferring to go with the miners in this situation. So this goes right back to, Rag, I know you want to trade gold. I do. But why? Is there something better in that narrative that would give us outperformance? And that's where trends are going to be able to get preferential treatment. They're going to be at the top of the watch list as compared to non-trending markets, despite the directional bias that they might have. I hope that makes sense. All right. Next up, Martinko asked, am I interested in Lily Long? So we're in, again, that tail wags the dog season. And inside the 2 weeks, I'm very hesitant to be a directional debit option trader, meaning I'm long calls, long puts. And when I'm long calls, long puts, I know that inside that 1 to 2 weeks before earnings, implied volatility goes up, which simply means the options cost more. So I'm paying more, and I'm not going to hold through earnings. So I don't have any issues with vol crush. But I love the trend. If we weren't just right on top of earnings, what happens here is I'm going to get out before earnings, which means that I'm running out of time. I don't have that much time. So this trade, while a legit buy the dip in the wave volume ledge, oh gosh, there's so much about this that looks so great. I don't have a lot of time for follow through. So if you are willing to buy this, remember, you need, from my rules, you need to be out before earnings. And if you want to know what my rules are, Trish has written up a fantastic explainer on the 642 earnings window, where I talk about how to scan 6 weeks out before earnings, not 6 days out, not the day of, right? 6 weeks. Start deploying is this a buy into the rally type environment, or is this a short into the tumble type environment? Double reds, double greens. And then what that time window is for our entries. So with that being said, we have very little time. Check out countdowntrader.com, or even better, go into Google, search Countdown Trader 642 earnings, and it should be the first hit that you get. Check that out, and you'll see why I'm kind of stuck on ELLY. EWZ is still on the radar, Martinko. EWC is not. EWW, I know I've talked about, but I haven't sent out any alerts for our members. So I'm going to stick with, where have I sent out alerts for our members? EWC, we've been watching. EWW, we've been watching. There's a lot to like about these, but EWZ's basically where most of our focus has been, and it's going to continue to be. We have an aggro position that we took a paper cut on. Yes, we take losses. That was, though, I'll tell you what, I was very, very happy about that paper cut. And a couple members also emailed me last night, said, Rog, it kind of felt good to take that paper cut. And you might say, good to take a loss? Again, we've gone almost 6 weeks, maybe a little bit longer, without one. It's probably one of the craziest runs I've been on in the last few years, especially considering this isn't the buy everything screaming uptrend market. We're doing this in chop. But it felt good because what was happening is, and I was expressing this to the members in the Sector Secrets room, I said, and Lorna Bot's saying 7 weeks. Yeah, 7 weeks. And so it was good to take that loss because it was feeling a lot like being the pitcher deep into the seventh in a no-hitter. The pitcher's nervous, the infield's nervous, heck, even the outfield's nervous, right? And what happens is you get into that psychology of you don't want to make a mistake. And I found myself, for two reasons. One, who doesn't like to win? And two, when you do it in the fishbowl, welcome to the fishbowl, you kind of get used to, I don't want to send out a loser. And so when we finally have a small paper cut, this is an aggro position, 25% budget, 1.25 point risk to our account. So very small loss, but it sort of now has a lot of folks in the room said, whew, kind of freed us up to say, all right, now it's a 0-0 ball game. We can kind of start from scratch. We don't feel this need, to keep this run going. And I'll tell you, I know for me, even sending trades out publicly, yeah, it was finally good to get a small loss out of the way. That was EWZ. But am I interested in getting back in? I am. Just we need another setup. All right, CLF. So again, please remember when you're looking at these symbols, if we're inside 2 weeks, for me personally, it's a no-go. Hot zones are great. Hot zones, there's two ways that I recommend trading a hot zone. What's a hot zone? That's a Ragheeism for a scheduled, high-impact, high volatility event, right? Unscheduled, there's no such thing. We don't know that it's coming. Yesterday, we got bombarded with unscheduled geopolitical sound bites, right? Those aren't hot zones. We have to know it's coming, which means it's been discounted. We are all collectively sort of waiting with bated breath. So in the case of CLF, there it is. There's my hot zone right there. I'm inside my 2-week window. But if you look back and say, Rog, you're actually looking. So if we have earnings on April 2-2, you are really looking at buying dips in Cleveland Cliffs back the first week of March. And if that's what's, clicking Oh, that's how we focus on rally into earnings. Double green, start 6 weeks out. Really make sure you're fine tuning your entry 4 weeks out and you stop about 2 weeks out. Look what's happened over the last couple of weeks. It's crazy. I don't want to engage in that. Implied volatility is going up. I, as a directional debit trader, am going to not be at necessarily the same advantage that I would be uh, outside of that 2 weeks. So you might say, Rob, what about that crazy wick? Here, let's drop a vertical line. So this is on the 22nd. So then the cutoff would basically be the 8th. That's my cutoff. So that was a valid buy? Yeah, that's the very edge. That was pretty much the last opportunity that we had. Now I got to wait till after earnings. And why do we do this? Let me show you an aftermath of a winner that we had. And I said, gang, you got to get out after earnings. It's so get out before earnings. Don't play earnings. Don't assume, look, it's a coin flip, gang. Earnings are a coin flip. There's so many things that go into what was discounted, what was the whisper number. If you're playing earnings and you're not making the whisper number really the number one conversation, then, and I don't mean to sound arrogant saying that, you don't know what earnings are about. It has nothing to do with the previous history. It has everything to do with what has been discounted before the release. So this is where whisper numbers are the game. Whisper numbers for earnings per share, whisper numbers for revenue. What have traders and investors already know? What do they already know and have discounted into price? Earnings are all about the contrast between whisper numbers, company guidance, and then what we ultimately get. And the contrast between that is where the volatility comes, which is why, and I know a lot of you know this relatedly, which is why we can get quote unquote good earnings or a beat on the earnings per share of the revenue and the stock goes down. Why was that? A lot of you have seen that. That's not an unusual phenomenon. Why does that happen? Because earnings are all about whisper numbers. That's what I teach. And we work those whisper numbers. We work that trend in that 642 window. So that's where I say, look at what happened to Freeport Macmoran. We had a winning trade. A lot of you will notice, oh, Rog, there's a couple buy the dips in that 642 window. Oh, but if we held through earnings, that's why we say get out before the melee, get out before the mosh pit. That's why we do not make bets on earnings. We play them into the event, into the hot zone. We play them after the hot zone. We do not delude ourselves into thinking that we can guess at which way it's going to go. The reason we tend to want to, you might say, Rog, but I kind of want to. Believe me, I used to do that too until I realized the whole whisper number psychology. And oh, daddy's home. So that's why my husband just, the dog was sulking here. The husband was at jujitsu. So that's why we want to remember that every now and then when we do have a great earnings win, it's so memorable because it feels so great to have a big win like that. But if you really look at it objectively, you'll see all the losses you get in the wins because they are so outsized, just are more memorable. So that's a long explainer for Cleveland Cliffs, Jeff, but I really wanted to show you all why we do not want to bet on earnings. It feels great. It's kind of a sexy, fun trade, isn't it? But we're far better off playing either that rally in the double green 642 window or the tumble 642 window. I explain it all. It's very simple. It's over at the Countdown Trader site. And then the whisper number is sort of the secret sauce. And, at some point, I'm sure we're going to get into that in the mastery, but it's all about the whisper number. If you've never thought about that before, go do a little bit of research. And I think it's just the light bulbs are just going to go off. All right. So I hope that was helpful because I know I kind of went on a little bit of a deep dive there. So thank you for the question, Jeff. All right, gang. And just like that, I am out of time. Boy, that goes quick. I see a lot of questions about GDX and gold and so forth. I do like the pullbacks that we could see on some of the oil stocks. But again, remember, gang, if we're inside that 2-week window, my hands are tied. We've already played a lot of these. And then if you see that earnings is inside 2 weeks, you know that I'm not going to set that up. So as always, gang, thank you very much. Thank you for caffeinating and dominating with the crew Monday through Friday. Wow, there's a lot of great questions here. Again, we'll be together on Sunday. It's a 30-minute show then. As always, be good to each other. I'll see you at the Ask Me Anything. So we have a 90-minute version of Charts and Coffee that we do every Friday afternoon. So I'll see a lot of you for that. If you're a member of the Futures Room or the Sector Secrets Mastery, that's an every Friday thing. So I'm sure I'm going to see a lot of you for that. Be good to each other. Enjoy your weekend. I'll see you Sunday night, 6 p.m. right here at the Simpler Trading YouTube channel. Leave your questions. I will go back and check this out later on. Smash that like button if this is moving the needle for you. And I'll see you Sunday.